Silver is something that they're obviously keen on accumulating. And there are all sorts of, rumors out there that because gold for immediate delivery has been difficult for the Chinese to get, that they have shifted and pivoted to accumulation of silver. Maybe that's why we're seeing such great strength. It's interesting, they try and knock it down, whoever they is, they try and knock it down. Maybe Bank of America, who's got this wickedly large short position of roughly 1 billion ounces of silver on COMEX and 30-40 million ounces of gold on COMEX, according to Ted Butler. Obviously they have a vested interest in mitigating its rise, but it comes right back up. And because a lot of this, Dunnigan, has to deal with the fact that these countries, even a few years ago, were not sophisticated or wealthy enough to do this, but in concert. And I think over the last several years, not only in concert are they doing this together now, but the sophistication, the wealth, the understanding of what's happening. Yeah, they're beating us at our own game, whether it be exchange for physical, by first shorting the paper price, and it appears to be HSBC Bank, shorting the paper price and then standing for delivery on the OTC market with huge amounts of gold, and or India importing 500 million ounces of silver, which is right now, according to the COMEX registered category, is, there's only 300 million ounces in registered and eligible combined, only about 45 million ounces in registered. Those are the bars backing the contracts. India's imported more than the entire COMEX ecosystem and 11 times more than the registered category. But that doesn't count what's happening on the Shanghai Exchange, and so these countries who understand what's going on have been accumulating and repatriating, and now they're slowly turning up the heat, because if they turned it up too fast, I think it creates a problem.
According to Andy Schectman, Bank of America holds an immense short position of roughly 1 billion ounces of silver and 40 million ounces of gold on COMEX, which may be influencing other countries to sell US treasuries. With the Chinese pivoting to silver due to gold's limited immediate availability, and India importing 500 million ounces of silver, more than the entire COMEX ecosystem, there's a significant accumulation of precious metals outside the US. This strategic move hints at a potential shift in global financial power, challenging the strength of the US dollar and altering market dynamics.
I think if they sold their treasuries too fast and tried to arbitrage too fast, because ultimately I think that's what happens. I think ultimately at some point you will see Moscow or Dubai or Shanghai, they'll say silver is now $60 an ounce and gold's now 4,000 an ounce. And just like that, everything would arbitrage over there and the price would gravitate to it. These are the countries that produce it. These are the countries that accumulate it. And these are the countries that understand there is a pivot moving away from the dollar, with a large portion, certainly, of the Southern Hemisphere viewing gold and oil as a safer play, one that cannot be confiscated or sanctioned against them the way that it has been against several other countries, as we've documented well. So, yeah, I think you will continue to see arbitrage opportunities here because, look, there aren't a lot of traders out there who have the sophistication and the ability to access these markets. So it's the commercial banks and whatnot, but who knows when they turn it up even higher. But it has been consistent with silver now for well over a couple of months, and we don't see any sign of it slowing down. Gold, that spread is a little tighter right now with gold, but certainly not with silver. They're making a real strong push to accumulate whatever isn't nailed down. It will go down. I keep saying it's one of the biggest mysteries of my career. If you look typically when the ETF participation falls the way that it is, typically the price would fall with it, yet it's going higher. When you look at positive real return on the treasury market, usually the price of gold would fall. It isn't. When you look at a dollar as strong as it is on the dollar index, usually the price of gold would fall. It isn't. The demand from the central banks and the big money in China and India and Russia and these countries that are doing what we just talked about is strong enough not only to put a floor under the price of gold and silver, to give it resiliency at when it gets smacked down by the naked shorting of the Western commercial banks. But at the same time, we're seeing massive physical demand by the public in China, where the demand for their ETFs are triggering the breakers on the upside because the demand is so high. And we've seen really a lot of selling. In fact, it surprises me how much selling we have seen into these rallies in gold and silver by the public. The only thing that really is becoming harder to get and showing us higher premiums have been silver eagles. And maybe that's a precursor, but everything else I would say is ridiculously undervalued and ridiculously underowned. In fact, I was listening to your interview with our mutual friend, Rick Rule. He's right. He said, look, the only thing holding up the market has been central bank buying. And when the American public does wake up, we will see what real demand looks like, what real movement looks like. And the American public has really been largely asleep at the switch.
Andy's continues his insights, highlighting a crucial trend. Despite record central bank buying in 2024, the American public is largely unaware of the true demand for gold and silver. The first quarter saw the highest central bank purchases ever, surpassing last year's record. Andy notes unusually low premiums and excellent availability in the market, except for silver eagles, suggesting a major contrarian indicator. He warns that a sudden surge in public interest could quickly deplete current availability.
And when the central banks 2024 first quarter, the most they've ever bought ever in a first quarter, which was bigger than last year, which was the biggest. When these folks are buying the way that they are, it should tell you where this is ultimately going. They know the playbook, but yet our market here in the West is providing really amazing prices and availability and low premiums. In fact, the lowest buyback premiums I have seen in my career. And, you know, if you don't believe me, go to JM Bullion or SD Bullion and look at what they're buying things back for. I have never seen it, anything like it ever in my career. Now, to me, this is a huge contrarian indicator. I'm more concerned about the state of the economy and of this country than I've ever been. And yet it's as if, again, you and I are banging our heads against the wall, preaching to the choir. The choir gets it. The choir's loaded up. Some of the choir is selling. And I would say that has a lot to do also with the fact that over the last several years, I would say this big influx that came in 2021, the Wall Street silver crowd, many of them bought for the wrong reason. They bought to get rich. They bought thinking they would do the same thing that they did to GameStop and AMC. And it was an eye-opening moment for them to realize that this is the long game. And that's kind of the problem here is that, you know, Rick also talked about time and letting markets work and the compounding of time. And that's one of the things that's been inbred to me really from the beginning. I've been buying every 2 weeks for 34 years. What Rick said really resonated with me. Time, the compounding of time, letting markets work. And if you take a look at the price of gold, go all the way back, I don't care how far back you go into the 70s, it has outpaced the CPI. It has outpaced inflation. It is doing what it is supposed to do. But that's not fast enough for most people in this new environment of instant gratification. So a lot of people, I think, are tired of waiting the little by little by little. They're tired of waiting for the all at once. And maybe they're looking to other places, or maybe they just need the money in this ridiculously high inflationary environment we find ourselves in, and they're selling. So to answer his question, the availability has never been better, with the exception of silver eagles, which are getting high again in price. It has never been better in my career. And no, it makes zero sense to me. And I can't quite figure it out other than the fact that the rhetoric, the spin of rhetoric by the people who have been holding back the price, or the lack of positive rhetoric, or whatever it is, something has not awoken the public yet. And I hasten to think what that actually would be that would wake up the public, and hopefully it's not something horrific, but I do think we will have that moment where the public wakes up. And just like that, what is available and flush very quickly disappears. There's so much money out there. If you spend $100 every second of every day, would take, like 200 years to print what we did in the past year, like $6 trillion. And maybe it was 2,000 years. I don't remember if it was 200 or 2,000. It's ridiculous. And there's so much money out there. And it won't take but just a very little bit. Again, Rick said it yesterday, 0.5% allocation in the whole financial matrix in gold and silver. And if the average, or the mean, as he said, was 2% over the last 40 years, what happens if it goes to 2%? Well, that's a pretty big increase. It's a fourfold increase. What if it goes to 5%, which is what financial advisors say? Well, that's a tenfold increase. So yeah, best time to buy it I've seen in my career, honest to God, based upon all the metrics that we see happening and the availability. So crazy times, man. It truly, truly is a crazy time. to be in this industry.
Thanks for tuning in. Today we discuss the record central bank gold purchases in 2024 and the American public's lack of awareness, presenting a unique buying opportunity. With low premiums and high availability, except for silver eagles, now might be the time to invest before public demand spikes. Gold and silver have consistently outpaced inflation, proving their long-term value. If you enjoyed this video, please like, share, and subscribe. Hit the notification bell for updates and share your thoughts in the comments below. Thanks for watching.